saying, that was legit.
Yeah, I'll give you that one.
It was so good. All right, so we are here this morning to talk a little bit about credit with you ladies. So full transparency and disclosure, our Kayla here is a lender. So she lends people money to buy homes. That is what all of us do. We are all in real estate. But credit is so much more than that. Credit can affect your insurance rates. Credit can affect your car loans. Credit can affect if you have to pay deposits for utilities. Credit can affect all kinds of things. So Kayla could talk about credit literally for hours. We're going to take about 25 minutes. Kayla, what I'd like for you to do is address it from all angles. Because of course, obviously, home ownership for our clients is very important to us. So I definitely want you to hit that, but I want them to also get value from the other areas too, to just understand what things affect their credit, what things they can do to help their credit. We can talk a little bit about you, Paul, and anybody can reach out to us if they want to get started with that, all that good stuff. So you and Beckett and Harper have the stage now.
Yeah, so a couple little discretions. One, my lip normally doesn't look like this, but we were in St. Thomas and St. John last week, and apparently the chapstick I was using was not a great SPF, and I got a really bad sun blister. It's still healing, so it's cool. And then our babysitter today is sick, and so I have two lovely co-hosts with me as well. They're
amazing. They're amazing.
They're going to stay here. They have snacks and milk, so I think we're good. But yes, with credit. Basically what I want to start with is, and I have like a really good like flyer I have pulled up right here with me, and I'll post it in the comments once we're done so everyone can review it, because this is a lot of what I'm going to talk about. But as far as like how your credit is calculated, like a lot of people aren't aware, like, well, what's my score? Like, how do I even know what my score is? Or like, how is your score even, how do you even come up with a score? And the biggest thing is 35%, which is the largest factor for credit score, is your payment history. So by far, the most important thing is, are you making your payments on time? Oh, almost lost a kid there. The payment history is by far the biggest factor, making your payments on time, for having a higher credit score. The next largest amount, 30%, is the amount that you owe. And this can be a little confusing, because what I tell people all the time is having a lot of credit availability is a good thing. Now, how much you utilize that ability or that availability is where it can get a little tricky. So say you have a credit card with a $10,000 limit. You typically never want to put more than 30% by your closing statement. So for example, say you have a big purchase coming up. Say you have to buy, you buy a new house and you're buying a washer and a dryer, and you have to buy a new refrigerator, and you have, $8,000 on your credit card on a $10,000 limit. That's totally fine. However, you want to pay it down basically by the closing statement if you know that you're going to be having your credit pulled again. And so I talk to a lot of people who are preparing to buy a house, and it's when you're preparing to buy a house, that's the time you want to keep everything below 30%. So keep your utilization, like try not to put more than, rack up your credit card debt. Length of credit history. So this is a huge one as well. So it makes up 15% of your score, but the earlier you can start opening credit cards or any sort of loans is typically better. And so I do have people right now with children who ask me, like, when should I open up a credit card, or should I add a kid to my credit card? And I always tell them, whatever age you're comfortable with. So our kids, probably when they're like 16 or 17 years old, we'll add them as authorized users on our credit cards. And basically, that allows them to start credit history and start building their credit, but not actually giving them a credit card, but just giving them that history. So that way, whenever they go to buy their first house or their first car, they already have, 10, 15-year history of one credit card showing. And that will dramatically help people score. So a lot of spouses I work with, they'll be like, what should I do to build my husband's credit? We're like, I have established credit, but he doesn't. And the best advice I can give is just add your significant other to one of your credit cards that's been open for a long time that has good payment history. Now, if it has bad payment history, don't add that person. Because like if you've missed a few payments here and there, it's not going to be good. But if you've made all your payments on time, and it's been open for a few years, add your spouse to it, just to help build that credit history. Add your if your kid is looking at buying a house, buying a car, and they're 19, 20 years old without any credit history, and one of your particular credit cards has really good history on it, just put them as an authorized user. Just don't give them the physical credit card to use. And then
what do you think, Kayla, is better, to get them their own secured card or put them as an authorized user, or would you use a combo?
I would do both. I would first add them as an authorized user. Probably, like I said, they're like, I think the earliest, and what I found out is it depends on the bank. A lot of people ask us like, how old can you be to open a credit card? And I was like, I have no idea. And then what I've realized is that every bank has its own rules for age. And so, like I said, we'll probably around 16, 17 years old, we'll put them as authorized users. Or what we'll do is be like, if we're trying to teach them, about money and responsibility, getting them a secured credit card and basically teaching them, okay, we use our credit card, then we pay it off. We don't just open new cards just to open new cards,
Right.
And then, and I'll come back to that. New credit, including inquiries, is about 10% of your score. And so a lot of times when people come shop with us, that's one of their biggest concerns is like, oh, are y'all going to pull my credit? And I would tell everyone, there's a couple of factors with this. One, we have the ability to do soft credit pulls. So say you're just now getting into, hey, I think I want to buy a house in the next year or two. Or, I have the goal of buying a house at some point. And you're like, but I don't want to do a credit application because it's going to be a hard inquiry. Well, what we do is for those people is I do a soft pull on their credit. A soft pull allows us to see everything that we need to see in order to help guide and coach you on home ownership, but it doesn't count as a hard pull against you. So it's not going to lower your score. Now, if you are like, hey, I need to buy a house in the next 2 months, I'm going to do a hard inquiry. And at the end of the day, it's not going to lower your score drop maybe 2 points. What we see that people's scores get hit really hard is when, for example, I worked in finance at a car dealership about 5 or 6 years ago. And so we would have clients come in and to buy a car, and I would pull their credit. And when we pull your credit, we can see where else you've had it pulled in the past 120 days. And I would be like, okay, they went shopping at all the dealerships on 45 last weekend, and they had every dealership pulled their credit. And that's where people get in trouble is like, okay, they went car shopping, last month and this month, and they still haven't bought anything, but they went ahead and got pre-approved. That's where people will get in trouble is they get a lot of inquiries from various places. And so a lot of times when people shop with us, if they're like, well, I am shopping with other lenders, if you have 2-3 lenders all pull your credit in the same week, it's not going to hurt people. Because the way that the credit bureaus look at that is that you are in the process of shopping. And it's not going to hurt you significantly. Now, if you have 3 mortgage lenders pull your credit and then you decide to put your house on hold, and then 6 weeks later you go to 3 other ones, and then you put that on hold, and 6 weeks later you go to 3 other ones. I mean, that's where people get themselves in trouble.
Mhm.
Um, so don't let having your credit pulled deter you from trying to learn how to get a mortgage. If that makes sense.
Talk to people. There's two things I want to make sure we cover. Number one is how they see the most accurate representation of what you would see on their
Yeah.
credit,
So
and that all of that.
I get a lot of people who will be like, "Hey, my credit karma shows this," or my experience score is this. Those are typically not going to be as accurate for mortgage. So for us, you have different types of credit scores within the credit bureau. So what people see on like Credit Karma and stuff like that is typically going to be like an online score model where it's like, for example, say you go get a new credit card, that might be your score might be pretty close to that. Whereas if you have a vehicle or you're buying a house, your mortgage score is made up of different parts. So
Oh yeah, tell them all about the different scores because I always find that fascinating. My score can range so much with
yes.
all the different models.
Correct. Yeah. So like if I were to go buy a car today, my score at the dealership might show as like a 780. But if I have my credit pulled for mortgage, it's probably going to be about 50 points lower.
Mhm.
And it's just because there's different scoring models for different types of loans. And obviously, with mortgage being a mortgage and typically the highest types, largest types of loans that people use, it does have a stricter. I'm trying to think of the way to word this. It has a, it's a, what's the word I'm looking for? It's like, it's a stricter, like your score is,
Guidelines,
yeah.
guidelines.
And so the way I tell people the most accurate place to check your score on individually without having like a lender or a bank or anyone pull it is myfico.com. So myfico.com allows you to pull a free credit report. It allows you to see your history on there. So if at any point you ever want to see where you're at, or you're worried like, hey, did this bill show up on my credit, or I forgot to pay a toll like 2 years ago, and I'm wondering if it's got reported to, to collections. You can always go to myfico.com and pull a free report.
Okay.
You can also pay, like anytime I have people who are like monitoring their credit, I tell them to sign up with them. There is like a monthly fee for it, but it is awesome. Like,
I
I
have
mean,
my app on my phone, and every
yeah,
time something happens, I get an alert.
yes. So myfico.com is hands down, if you're going to ever pay for any type of credit monitoring system, like don't do the Credit Karma upgrade or don't do the Experian upgrade, anything like that. The myfico.com one is legit. And obviously, like I geek out on it because I know like we can read through those reports for people and tell them like, hey, if you do X, Y, and Z, this will significantly help you.
Right.
One of the big things I wanted to talk about is also these store credit cards. I have a funny story about this. My husband, who I work with, Danny, was at, I think he was like at Best Buy or one of the, like he was at somewhere one day. And this poor, sweet, like high school girl working the counter was like, oh, like, do you want to subscribe to a what Best Buy credit card today and save 20% or whatever it was? And he just like, he didn't like go off on her, but he was like, no. And do you know why? Because this is what's hurting people. I work in mortgage and I see people get themselves in trouble all the time because hey, it's okay. It's okay. Hold on. We're having a milk crisis.
So while she's gone, I will just give us a plug here for a service that Kayla has access to. If you guys ever want to work on your credit and have an actual expert help you understand what to do, what things to pay, what things not to pay, etc., we have a company that she works with called Uqual. Nobody gets any money from this. It's just something that we send people to. And they have we have some members in here in this group right now who have seen their scores increase significantly and are on their way to better credit health. So, credit, if you want to talk about that one, Kayla, you can. Oh, yeah, no problem. But UQual is the name. There is a fee for the monthly service, but you've actually got experts guiding you, and they'll get you, they'll get you ready whether you need a new car, whether you need a new house. I mean, ultimately, they're looking at it from a mortgage perspective, but anything you do to improve your credit health is going to help you no matter what it is you're trying to do. Even if it's just going down, you're moving and you need new electricity instead of having to pay a hefty deposit because you've got all kinds of stuff going on with your credit, then you're going to be in a better position there. So how's Harper doing? We better?
I definitely agree though about the store cards. I think so many people open store cards and then you get the savings up front. But when you have too many credit cards, you can't keep them all straight. You're going to miss payments. And then suddenly you have a tanked credit score because you forgot to pay a $35, a $50 payment, and you had 10 of those, and no one can keep them straight. I think it's best to have like 1 to 2 that you usually operate.
100%.
Jump in, but that's your sweet spot. If you get too many store cards, first of all, no one is that loyal to a store. You don't need that. Okay. Get over that. I think you just have 2 or 3 that you can manage. 1 if you need. I mean, Kayla, jump in if you disagree, but don't ever. Yeah.
No, I mean, this actually happened to a good friend of ours. They went to go buy a house and we were doing their mortgage and we pulled their credit, and our friend, she had 1 late pay on a Victoria's Secret credit card from like 4 years ago, and she didn't have any other late pays on her entire credit report, and it dropped her score to like a 650. And it's like just that one little, and so we were able to like call Victoria's, like we were able to like help get it, but like it took like a few months for her to like get her score of just that one late pay. She was like, that was one of those stupid credit cards I opened to get the discount. Then I forgot about it. And then I finally paid it and just paid it off. And so those store credit cards are, they seem like they would be a good deal, save you a bunch of money, but really that a lot of times that's what we see when we pull people's credit and they have late pays. It tends to be those just random one-off store credit cards, So definitely be mindful of those. What else was we going to talk about? My FICO, by far the best. Student loans, if they're in deferment, make sure that find out, this is another big thing we see, is people will think that their student loans are in deferment and then will pull their credit and they'll still have late pay showing. And that's because sometimes with student loan payments, they'll send like a little letter in the mail and just be like, hey, your payments are back to normal again. And people just don't realize it. And so
we've seen that happen.
You see that happen a lot. So always be aware of, if you think your student loan payments are in deferment, but you haven't logged in like a few months, just log in every few months or give them a call and make sure that they're not changing things. With COVID happening, all sorts of student loan stuff like went crazy, and we're still seeing repercussions from that, where like people were in deferment and then now they're like bringing everything back to normal, the minimum payments again, but people aren't realizing it. So people are getting late pays and not noticing it. So that's a big thing. One of the big wins we've had recently is that health loans, like if you do have medical loans, they're not going to hurt your credit as much anymore. It's kind of like one of those, I haven't actually seen it yet. But basically moving forward, if you are purchasing a home, we are allowed to exclude medical loans and medical debt from your credit report. We don't have to count that debt. So if someone will come to me and be like, "Oh, I have all this medical debt," it's not that.
Okay. What is that? Are we here now?
I can hear you, Ellen, but I cannot hear
Okay.
Kayla, but she's not muted. So I think something's going on.
I can hear y'all.
There you are.
Oh,
You're back. Okay, let's go ahead and hit a little bit about you, Qual. Tell them how they can reach you, all that good stuff, so we can let them all get about their day. But I hope this has been valuable for you guys. Just remember, all three of us know a lot about credit, especially Kayla, but feel free to reach out to us. We're here to be of value to you guys in any way we can.
And we're non-judgmental. I mean, we take calls
yeah.
all the time from people saying, I really want to buy a house, but I don't have the credit score. Okay, great. Then let's start there. And
Been there, done that. I mean, I've had opportunities in my life where I had all those store credit cards a long time ago, and yeah, bad choice. Bad choice.
No, we listen and we don't judge, but we really mean that.
In this instance, we really mean it. Now, there's some things we might do some judging on, but that ain't one of them.
The Super Bowl halftime show, we will judge and we will talk about it. But this is this is literally what we take these calls all day long. So,
yeah. So UQual is a company out of Denver that we work with, and as a mortgage lender, we get hit up all the time from third-party companies hey, they want us to use their business for X, Y, and Z. The one that we've consistently been with for the past 5, 6 years has been UQual. And basically what UQual does is they're a service that we work with directly. So if someone comes to us and they're like, we want to buy a house, but their credit, we can't get them approved because of their credit score, or they just need to work on their credit, anything like that, then we connect them with UQual. So we have a whole portal system with them that we put all your information in. They'll reach out to you. They'll go over, they do free consultations with all of our clients, not all of our clients, but the clients that we refer over to them. And then from there, you can decide whether or not you want to work with them. And basically what they do is they give you a game plan of how to work on your credit. So there's certain things I can definitely help with after I pull your credit, to give you pointers and say hey, you need to pay this card down, you need to do X, Y, and Z. Whereas if you have collections on your credit, if you have disputes on your credit, if you call them and you're like, this is from an apartment I moved out of 5 years ago, and they kept my deposit, or they hit me with a fee after I moved out, they can help you with that stuff. Mm-hmm. So they help get that stuff removed. They help fight basically the stuff that's a bunch of BS that shouldn't be on your credit report. So they are phenomenal. And then what they do is they'll have monthly calls with you. And then whenever you reach the point where we know your score is going to qualify for our house, they then reach back out to us and basically say, hey, get in touch with your client, get in touch with their real estate agent. It's go time. They're very, very well prepared at this point. So,
and if you're not even planning on buying a house soon, and you're like, well, that's a couple of years, 2 or 3 years away from me, all it's going to do in the meantime is help you with everything else. The better your credit score is, the lower interest rates you'll have on other things, the fewer deposits you're going to pay. You're just in a better position for life in general, right? So don't think of this we would all love to help you buy a home. There's no denying that, but we're not just here for that. And it's going to help you in just life in general. So don't hesitate to reach out to us for this, just, for the sake of being in a better position for all the other parts of your life.
And unfortunately, I've heard a few horror stories from people who thought they were working with a credit repair company who asked for thousands of dollars up front and then ended up being scammed. And so that's what I tell people is when you work with a credit repair company, they will not be making the payments on your behalf. So if they ask for money, like to make a payment for you, that's a red flag. The type of company that UQual is that they basically just do like, it's like a monthly subscription service. So yes, you have to, I want to say it's like $100 a month or something. But if someone's asking you like, hey, I'm going to make this $4,000 collection payment on your behalf, like do not give them that money. That should never be the case. They're more supposed to be coaching you on what to do and how to do it, not actually handling a lot of this stuff on your behalf. So I've heard that story from several people, but UQual is absolutely amazing. They're legit. They're phenomenal. So if you are already working with someone and you haven't like heard from them in a month, or if you haven't actually gotten like any updates from them, or it just seems a little weird, feel free to reach out and let me know the name of the company, because there's definitely a few that I've heard of from people before that I'm like, nope, let's stay away. And then obviously going online and doing due diligence, Google research the company, look up reviews just to find out if they're legit or not. So
I love it. Awesome. Well, thank you, ladies, so much. Thanks, moms, for joining us. Kayla, will you put like your UQual information and all that down there?
If I can find my mouse. But...
Okay. All right. See you guys later. Have an awesome Monday. Bye.
Yeah, y'all too.